Alright, so today what I'm going to be going through um, is how to read the market using price and volume, but in a very specific aspect. Alright, everyone knows or should know about effort reward, but how do you read it? How do you read effort reward using waves? Alright, so this is really important because many times that will show you the trend is going to reverse. Right, so there's two ways. Right? First of all, effort is just another word for volume. That's the first thing you have to understand. Effort reward, what it means is effort is a lot of volume, and reward is price, the movement of price, how much it moves. Okay, so effort reward is nothing more than looking at volume and then looking at the progress that price made. So very, very simple way of looking at, an effective way of looking at volume and price. So the first thing you need to know is when using waves, let's go over the effort part. Effort is nothing more than looking at the volume. All right, so you just look at the volume. All right, and you determine whether you have a lot of volume or less volume. It's nothing more than that. Is there a lot of volume, relatively speaking, based off of the prior waves? Is there a lot of volume in this wave versus the past waves? That's all it is. It's just looking at volume. And then reward can be two things. It can be the entire length of the wave, right? So this entire length of the wave, or it can be only the thrust from high to high. You can read it two ways: the entire length of the wave or the thrust from high to high, meaning from the prior high to the current high. If there's very little thrust, there is shortening of the thrust. And then taking a look at volume, if you have a lot of volume, then you have to ask yourself, hey, how come we have all this volume and we made so little thrust? We had the thrust shortened. There's so little movement from high to high. All right, so that's basically looking at volume and the amount of thrust. So that's one way. The other way is to say, look at all this volume, but look at the entire length of the wave. So let's say this wave had 100 contracts. I'm just giving an example, 100. And the prior wave had 50. The prior wave is bigger, but it has less volume. This wave is 100. It's double that amount, but it has more volume. So it took a lot of effort, and we only got half as much reward in terms of distance as the prior wave. So that's the second way to read effort reward. So again, effort is nothing more than volume, and reward is what you get for it. And when you look asking yourself what do you get for it, it's two ways of looking at it. It's either the entire length of the wave or just the thrust from high to high or low to low. And seeing and measuring that progress from high to high and saying, oh, look, for all this volume, you made so little progress, such a minor high, such a small amount of movement from the prior high, there's an issue, right? Because it took all that volume and only gave a very minuscule higher high. That's not a good thing. If you're bullish, it's not a good thing. Anyway, so I'm going to, it doesn't really matter which interpretation you use. I mean, in my opinion, both make sense. And usually, whether you use one or the other, it doesn't really conflict that much. It's usually the same. All right, so I'll just give you an example of some effort reward examples. All right, so here's a clear example. Look at this here. This volume is 32. It's actually 32 times 10,000. But if I was to show you this volume here, it sticks out. See how it sticks out? 32. Yeah? Now if I told you that 32 volume produced only 30 cents in thrust, it's actually less than the prior wave. The amount of thrust is less than the prior wave. So you have so much more volume, but look at how much distance from high to high it's making. It's very small. That right there is effort reward. Again, look at the volume. It's sticking out like a sore thumb. Look at the thrust. It's less than half the prior wave. So all that volume and such little thrust, what's going on? So that is telling you that the market is encountering supply. So in this uptrend, when you do this, right, go up, 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 here, it's encountering supply. Now you can label it any way you want. You can call it effort, you can call it climactic. It doesn't really matter, right? Because it can be interpreted as either. So that's how you interpret it. Boom, all that volume, very little thrust. That means it's encountering supply. Demand can't overcome it. What's going to happen? It's going to go down. That's the proof. Right? Then that's from that point, from that climactic point, it did this and then went down. Right? All right, let's take another example. Here we have an example. What is this? 62. This is a problem. You have all this volume. I don't really read it that well. All this volume, 32, 44, 55, 62. You have all this volume, and how much thrust is it producing? 0.1. Look at this volume, 62, right? First of all, it sticks out, it really sticks out. And how can you tell me that this is producing the same amount of thrust that the prior wave down produced on only 14 times 10,000, whatever. 14 volume produced 10 cents. 62 volume produced 10 cents. Okay, now don't read it mechanically, like look in the background because, you know, the wave might be cut off and things like that, but this is telling you there's a problem. All right, here it's really evident when you have 49 volume, producing 20 cents. On average, that is a lot of volume. You know, over here you have 23 volume producing 20 cents. Over here you have 9 volume producing 20 cents. And now you have 49 volume producing only 20 cents. Does anybody think there's a problem with that? Well, there is. And look at what happens. It reverses. It reverses. Reverses, goes up. Because, I mean, this is tape reading. Like what I'm showing here, you have volume, but it's not going down. You have volume, but it's not going up. So this is really important because a lot of folks will just say, you know, price is king or something like that and only focus on one aspect. Or in other white-collar traders, they only look at wave volume or obsessed with volume or volume at price or volume profile or volume this and volume that. But the key point here is not to use volume or price in isolation. It's how to use it together. And how to use it together is what, you know, that effort reward is all about. Effort reward is how to use volume and price together. because they're different aspects. You have volume, you have price, and you have time. So you do not use them in isolation, right? These are the factors of the market. You do not use them in isolation. You have to know how to interpret using them together. And the Wyckoff way of using it together is effort reward. That's it. I can show more and more examples. We'll look at some volumes here. Again, it's a very abundantly clear example, right? Over here, 20 cents and the same amount of volume, 81 volume is producing only 20 cents. So what happens? You get a reversal, it goes down. So just look for that heavy volume producing less reward. And it's so logical that it's telling you that knock knock, you've hit supply, you've hit a demand area or a supply area, because you cannot penetrate through. The pressure, the buying pressure is unable to break through the overhead supply, because the overhead supply is absorbing the volume and it's continuing to absorb the volume, and that's why volume keeps increasing but price does not increase. Let's see, 45 produces 70, 40 produces 50. Oh, I don't know about all this. All right, now don't use it mechanically. You have to use it with judgment, because the charts, you could have a wave that breaks in the middle and because of a minor little pullback, so it makes it look like it's heavy volume and little price, but you have to be smart enough to see the location of the wave. Is it at the top or is it at the bottom? You have to see that it's not broken up, so you're not misreading it, and that's it. So this could be applied. I mean, this what I'm explaining here has nothing to do with Renko or bar chart or anything. It just has to do with price and volume, which means it's going to help you on any style chart, because all it's saying is, as you're going higher, you're encountering supply and you can't get through. If you can't get through, what happens? Bingo, a reversal happens, right? So this is how you read it. This is the key way of reading it. The other volume, there's other ways of reading volume, but there's a lot of intricacies. What you don't want to be is just looking at a level and saying, oh, okay, it's a breakout, high volume, right? Because that needs to have follow through and things like that, and look at the test and etc. etc. But in terms of a turning point, it's critical for the Wyckoff trader to have this in his arsenal, so that when you're doing your analysis, you're actually using price and volume, and not just the break of whatever, retest Ison Creek, because you want to understand what's going on. I'll give another example here. Right, so you have 10 volume producing 50 cents. Where is it? 10 volume. Then you have 4 volume producing 20 cents. Okay, makes sense. And then you have another 4 volume, and that produces a lot more. 4 producing a lot more price. So little bit of volume, but producing a lot of price action. So whenever that happens, you have to ask yourself, why is a little bit of volume? That's the opposite of effort. That's opposite of effort. So that can be a couple of things. It can be like, it can be bearish, meaning it can be like a fake move, but it could also be another concept from a perspective of price and volume. It could be ease of movement, meaning there's no overhead supply, so a little bit of volume causes price to jump up. You see? So that's the opposite of effort reward. In this case, I don't know what it is. Honestly, this little volume produces that much, and it's on the top of 1, 2, 3, fourth wave going up. That gets me a little suspicious. So I just wait, and then after that, I get a much clearer picture here, where you have a lot of volume and not a lot of thrust. So that is telling me, oh, something's up. Someone's hitting some supply. I mean, you know what? This volume wave up here is the biggest in 48 waves. How the hell is it so much volume producing like this little shitty wave? You know, why? Does this make any sense? Do you think this is random? Crazy? Random. Is it random that you had all this volume and it only made this little amount of distance and it's on the top of multiple waves, and after that there's the heaviest down wave in 49 waves? Is that random to you? Does it make sense to say that this is the highest volume in 48, I think 48 or 49 waves up, and then after that the biggest down volume in 48 or 49 waves? Or are they selling on the way up and selling on the way down, which is a characteristic of distribution? And what's really going on, if you want to use a sequence, is your climax and your rally, that automatic rally, which is nothing more than a change of behavior on the downside. And all of that can be even expressed easier by saying it's selling on the way up and selling on the way down. So however you want to view it. So all that volume is basically supply, supply, supply. And then once they're done on the way up, selling on the way up, then they sell on the way down. That's why you get the upprint heavy volume first, then you have the downprint heavy volume after that, because they're done with they can't sell anymore. So then sell on the way down. And as soon as you get there, back to that area, what do you get? Heavy selling again. And then you try to go up, can't go up. What's going to happen? The downtrend. This whole thing is distribution. That's how it happens. Whether it's minor distribution or major, I'm not going to get into all of that. There's no point. But that's what's going on. It's definitely what's going on. So many times you're going to see up volume on an up rally, heavy up volume on an up rally, then heavy down volume on a down rally. It's nothing more than distributing at the best high prices first, and then if you cannot distribute because no one wants to buy those high prices, and you do on the way down you have to sell. It's just market dynamic. Anyway, so the point here for this lesson today, folks, if you're out there listening, is when you want to read volume, you want to read it with price. That's the first thing. Second thing, there's two ways to do it. Look at the volume and view it as effort. Is there a lot of effort? Yes or no? If there is a lot of effort, how much reward are you going to get for it? And what is that reward in terms of waves? It can be the distance of the wave from high to low or low to high, the distance of the wave, the start to end of the wave. Or it can be the thrust from high of the wave to from the prior high of the wave to the current high of the wave, or the prior low of the prior wave to the current low of the current wave. Right. That's all it is. All right, thank you. Bye.